This is your market wrap for May 15th, 2019. Impressive recovery from the Qs. Already started the recovery from the gap down prior to the news coming out of the delay of the tariffs. All right. And as you recall, yesterday we said over 181.63, no longer bearish on the Qs, right? That was our line in the sand, right? And then we got through it on the SPY later in the morning, okay? And then in order to initiate a bullish bias, we'll have to wait for the next setup. You can see the SPY starting to base out sideways here. The longer this bases, that will set up a breakout. So I'd like to see this base a little bit more. And I think we will get more sideways price action into the next few days. Okay, that's what I expect. The downtrend on the hourly recently broken. Wait for the next setup, right? And we'll see how that resolves. On the Qs here, same thing. The more that we base out sideways without coming in first, the more bullish. Especially if we break underneath this, I'm going to be still neutral. If we get underneath today's low, I think would be our first area to start looking bearish. Okay, we've seen these trend breaks before. This does seem to have more follow through than this one did, right? We went neutral here and then back to bearish. And then on a retracement, we said stay bearish. Okay, and then we got a little bit of follow through on the gap down and then reversed and went through the area that we said if it breaks above that area, we are no longer bearish. Okay, so neutral bias going into tomorrow. We'll see what we get. We know where or what we would have to see in order to switch to a bullish bias and where we would resume the bearish bias. But neutral going into tomorrow based on the break of the hourly downtrend. You can see we got the same thing on the Qs and SPY here. Okay, let's go over today's play. Had a quick play in the morning on the BES. Nope, not on the BEST. On the TCS. BEST was yesterday. And the TCS, here are the numbers for the TCS. Okay. Now if you recall yesterday's play, which we will go over a little bit, because I just want to talk a little bit about management. Here was the BEST yesterday, which was gapping up, and then clearing the support. The gap got reversed and got sold. So what did we do? We played it short on a 5-minute sell setup, retraced right here, did a retracement, and then we shorted it in here, covered most in here, and then kind of hung on to it until the end of the day, popped right there, and we were out of the last piece there. Today was the TCS. TCS, you can see, got sold right away. Market was getting bought. This was getting sold. The gap was getting sold down, 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 down. Okay, and so as we started to get this consolidation, now I'm interested. I didn't know that this gap was going to get sold right at the open. What I'm waiting to see is if we put in a pattern. And the pattern that we put in was a breakdown. So we put in these sideways bars here. Low of this bar here was 780. That was also 780. Had a few cents spread, so I said under 775. So that's where it triggered, okay, on the TCS. Now here's kind of what I want to bring up, because while this looks really nice and looks like good follow through, I used to think that when I got into a play and we got big volume, that meant that big money was on my side and that it was going to be a big play and that I was right and all of that. It's actually much the opposite. Not that there isn't big money involved, but enough people, either longs that wanted to get out or people looking to initiate shorts like I was, all decided that this was the place and the time. So the problem with that is then the follow through, and then the rest of the people who want to join in aren't there because we all chose to do it at the same time, right? So actually, when that happens, I have to be worried that the bottom is in. And that's been my experience. I play a lot of breakouts, a lot of breakdowns, right? So that's something that I know happens, right? Which is why the very first decision point in my management is if I get a wide range entry bar and has big volume, I can either trail half to the midway point of the bar or trail the whole thing to the inside, to an inside bar. Okay, so we got this big volume. So if I want to, I can already trail half to the midway point. Target 1 on this was around 730. Okay, and or I can wait for an inside bar. So we let this come in a little bit. I said go ahead and trail half, right? Trail half, because we got to 737, pretty close to 730, and the rest will go to that inside bar, right? That was the plan. I decided to use the 5 minute just so that, you know, we don't get shaken out, and then it trailed right there. More or less break even. I think you could have made a little bit. It really depended on where you got filled on this, right? And that was it. And that ended up being the bottom, because I've seen this before. That's my management. Now, it's important to execute your management, not because I expect that you're going to come up with the perfect management plan to get you the most out of every play, but it's if you are consistent, right, then you can actually make the adjustments if you find that your management plan is lacking. So when I was working with someone yesterday, they hadn't been in the room yesterday, so they didn't know about this BEST trade. So we decided to just kind of simulate and go over his management and see how he was doing, and if he could follow through on it, right? And he took the play, right, and then it got to the target. He took the half on the target, and then, you know, it started to come up, and then came back down, and it was looking good, and I think he was feeling pretty good about it. And then, you know, it started to bounce. And he said, oh, what is this here? What is this pivot? I said, okay, that's 502. And he's like, okay, if, you know, given this situation, I'm going to put my stop at 503. Even though it's not in my plan, I'm going to put it there. I said, okay, sure. Yeah, we'll run and see what happens, right? And then this is what happened, right? Hit 505, and then right back down to the target. Now, keep in mind, this was only an 8-cent stop. So, you know, that's a difference from where we actually got out based on the management that I use, right? About 8 cents, right, on the back half that he had. And I told him it's not that the 8 cents that you miss out on, see, we got out right here, right? He got out right there. It's not that this 8 cents is all that damaging. It's these from here to here is about 2.5 hours, right? What's going to happen during those 2.5 hours? You're watching it. You're thinking, oh, I can't follow my plan. Why can't I follow my plan? Or maybe, you know, some people blame the market. Why did they shake me out? I knew that this was lower, right? And it's distracting you from finding the next play. Also, you know, you're here taking a toll on you, thinking, well, I can't trust myself. You know, why can't I execute my plan? That kind of thing. And that part of it is really the most damaging part of not executing your plan. Your plan doesn't have to be perfect. In fact, I expect that, you know, there is no perfect plan, management plan. But if you are consistent, then you can make adjustments. You know, if you find out that using these kind of pivots before it makes a new low gets you shaken out and you miss out on stuff, then take it out of your management plan, right? The worst thing that you want to do, and the most frustrating part of inconsistency, is that on this one, right? Let's say this one takes out that pivot, but this never made a new low, so it's only an insignificant pivot. And you say, okay, I'm not going to trail to using insignificant pivots anymore. And then the next time that you run into this situation, right, and you're like, oh, I'm so tempted to trail here, but I'm not going to because last time it worked. And then the next time you try to stick with it, runs all the way back up and you take a full stop, right? And so you will end up, you know, cutting this one, which worked out well, cutting it early to avoid any kind of loss on the back half. I think that was partly the appeal, that this was around break even on the back half, and that would lock this in as a winner. And then you end up getting out of the one that would have worked well, and then letting the one that would have stopped out take a full stop, right? So it's important to be consistent, and then you can make adjustments from there. Because being inconsistent, doing one thing one time, another thing another time, right, sets you up to basically do kind of the worst possible thing in every situation. That won't always be the case. I think that's why it's hard to be consistent sometimes, because sometimes you will break your plan and it will save you some or avoid a full stop. And so you'll get away with it. But really, the goal, right, should be to be able to execute our plan. And so the reason I bring that up is because, my plan is written for me because I play a lot of breakdowns and I've seen a lot of things that when they get the big drop, the big volume, a lot of times that is going to be the end. And I know this has been down a lot, so maybe, considering that, I should even be even more weary of this bottoming early. Okay, so I just wanted to go over that with you because, I thought it was kind of reared its head yesterday when I was working with a coaching student and we were simulating some of the trades, and then, today just sticking with the plan. And then, if it turns out that, these inside bars after a huge breakdown like that end up, going up but then coming right back down, then I'll consider changing, the first decision point in the management plan, right? But the important thing is trying to be consistent, execute the plan, right, to the best that you can. Then when you have information that something should be changed, then you can always make that adjustment. All right. That's going to do it for today's market wrap. Going into tomorrow, we're going to be switching to a neutral bias, okay, from a bearish bias on the Qs and SPY. All right. Long term is starting to look a little bit more bullish. Did get to this support area that we'd outlined before, but going to be neutral on the intraday, and then on the next entry, I think on the longer time frames, we can be bullish. But for now, neutral, okay, going into tomorrow. All right, hope you did well today. If not, we'll be back at it tomorrow. We'll see what the market brings us, and I will talk to you then. All right, have a great evening.